The first step in the house buying process is to get a mortgage in principle. The reason you need a mortgage in principle is to first understand how much can you actually borrow from the bank. If you take a step back, right, a house costs 450 grand. You can more or less buy the house in the most simplest way via two methods, right? You can buy it outright with cash. So the house costs 450 grand. You have 450 cash in the bank. You give the seller that amount straight away. House buying done, right? Or you can buy the house with a mortgage. And a mortgage is more or less a loan from the bank collateralized with the property you are buying. So again, for example, if a house costs 450 grand, you have a 50 grand deposit, what you're going to borrow is 400 grand from the bank. So in order to know how much you can actually borrow from the bank, you need to get a mortgage in principle or just do more or less an affordability calculator. But the reason why I stress for mortgage in principle is a lot of estate agents want you to have a mortgage in principle from a bank first before they actually allow you to view a house. Because in their minds, they don't want to waste your time. And to be honest with you, a lot of times they don't even ask for proof of the mortgage in principle. But to me, it makes sense to have that first. Now, how do you go about getting a mortgage in principle? You can do this by yourself online via any bank's website, or you could use a broker, which obviously will come with a fee. And the reason why I'm saying to use a broker right from the start is because when you're applying for a mortgage, you want to be able to look at various rates across the different banks and compare. Doing this by yourself is very challenging. So right from the jump, when applying for mortgage in principle, just hire a broker. You can find one online or via word of mouth, and I think that will help your case. Now for this example, let's actually see how much you can borrow from the bank, right? So I've assumed there are two people applying for this mortgage. Now let's look at some numbers, right? Applicant 1 earns 50 grand and applicant 2 earns 45 grand. So the total income for the both people applying for the mortgage is 95 grand. I'm going to go to any bank's website. For this example, I'm going to use Santander. And more or less the only information you need to put in is how much you earn and if you have any debt, credit card, student payments, all of that stuff. You put that in a mortgage calculator, and to more or less tell you, based on your income of 95 grand, you're buying your first home, and with a deposit of around 45 grand, the bank will be able to lend you 422 grand. Now 422 plus 45 is 467. So more or less the max house price you can get is 467k. Let's round that down to 450 because I think that's a bit more conservative. So you can get a house worth 450k if you have a total income of 95 grand and a deposit of 10% of 45 grand, which I think is fair. Now, if we look at the Excel, right? Total salary, like I said, 95 grand, max house price, 450 grand. Your deposit is 45 grand, which is more or less 10% of the max house price. And your mortgage is over 25 years and you're going to borrow 405 grand, right? That all looks good because if you compare it, 405 grand versus 422 grand, you're borrowing less than what the bank will actually be able to lend you. All looks good. And in your mind, you start looking for houses that cost around 450 grand. But should you do that?